Yo, yo, yo. Welcome back to the channel. Thank you for stopping by. Here's my next update on the mother of all bear traps, basically the bear trap that I've been charting out for the past week or so. I actually called it towards the end of last week that this was going to be playing out. And now, it's kind of played out pretty much as I've described up until this point. I know yesterday I was calling for some downside. And we actually got that, but we're gonna have to check in and see exactly where we are in regards to how if we will see more downside or if it's up from here. In my opinion, I'll actually be analyzing it in real time and doing the wave count and everything for you guys. So if you're new to the channel, thank you so much for stopping by. Make sure you drop a like, comment, and subscribe and turn notification bell on if you haven't already. Also, watching until the end of the video is the best way to support the channel because that is the key metric that YouTube looks for in its algorithm is average watch time in videos. So if you're enjoying the content, make sure you stick around for the entire video to get my full thesis. And yeah, without any further ado, let's get right into it. So just like every video, I'll show you guys what I'm looking at from a macro perspective. So we have the long-term bullish trend, which is a solid white line at the bottom. And basically the long-term, we can say rejection zone. And this is forming a long-term channel that we're trading in that basically has lasted the entire year. I've also added these resistance zones that almost make more like a pennant formation. But I really don't want you to think of it as like a part of a pattern. Like I don't want you to think of the trend line at the bottom and this combining. I think that this is just a representative of the price getting squeezed down right along in this section and like what that represents historically. I'm also going to make a video where I talk more about the price action leading up to the breakup in June and how it relates here. I'm sure that when I draw this line, it actually shows you some of the similarities that you might notice, and I'm going to go over, but I'm going to go over it more in depth. Like I'm going to do like pattern analysis and stuff like that as if we don't know what has happened already. I want to go back and look at it and kind of see what I would have been seeing as it was happening. So again, if you're interested in that, make sure you subscribe to the channel, turn on notifications because that video should be coming soon. So anyway, let's get down here, look at the most recent price action. Again, I'll show you guys my wave count and the Fibonacci that I'm looking at. So what I have is a wave 1, 2, 3, 4, 5. And this 3 could go here, perhaps, if you wanted to include that in the run. I just prefer like this more explosive move to represent the 3, and then the more flat move here to represent the 5 wave. And then also, I do want to remind us that we did have this rising wedge that formed, which is a bearish reversal pattern, right? And that is what caused our break to the downside. If you don't know about rising wedges, I need to make a tutorial on wedges and the way that I trade them and the way that I treat them. But basically, this is a bearish reversal pattern. So you're experiencing upside, but the downward pressure up top is actually causing more bearish momentum, and you're usually going to see a break to the downside about 60-70% of the time. And then after that, so I think that this is one macro wave 1. Okay. So I think this is a wave 1. And then I think that we have what we're doing right now is an ABC corrective wave, and maybe we're coming out of it, but I haven't done the count on it yet. But the way I have it counted so far is A, B, C. And then so I think that this represents a wave 2 and a 5 wave Elliot. And I'll talk more about that soon, about what I'm expecting. But again, I'm just breaking it down piece by piece so that everybody at home can keep up. So you guys understand the rising wedge, the ABC pattern. So now I know today is a red day, but this day actually is pretty, I mean, we actually got pretty high at some point in pre-market, and then we spent the rest of the day breaking down. And so the key pattern that I'm watching in this ABC corrective wave, and what I think is going to be the most influential pattern to play out. And I know a lot of people are asking me about like head and shoulders that may be forming and uh, stuff like that. So I can talk a little bit about that. So the major thing here is I think this is a falling wedge, and with a falling wedge, that's actually a bullish reversal pattern. So normally this is a pattern that represents bears losing control of the price action and then bulls taking over. It's pretty much the opposite of the rising wedge that I described earlier. And then I actually want to get a little bit more granular here. Let's look at the hour chart and see where we are in regards to this, right? So this is how I've been charting it. And you could move this wedge like this way if you wanted to, and it would still be valid. So you could, build a thesis that kind of says that we might stay in here a little bit longer. You could actually build a thesis, especially if you're on the daily chart, that says that maybe we've already broken out of the wedge. And that's why I always say that this is a potential falling wedge, until we actually break out of it and then actually see that upward move that kind of matches up with the length of this, which is how you would measure like the breakout. Um, that's when you have like a confirmed falling wedge. But for now, we're going to chart it more conservatively and just say that this is where we're at, because I think that this is what's important to set proper expectations for people. Because I think that, especially with AMC, it's a highly emotional stock. And with emotional stocks like this, you can have moments in them where something out of the ordinary can happen. And it causes a really big emotional shift in the stock, and people, bears may get really excited or bulls may get really excited. One team thinks that they win and the other team thinks that they lost, and then it completely flips on its head. And I kind of described that in a few of my tweets today. If you haven't followed me already on Twitter, I'm at David Marino Jr. I'll have a link in the description to that. But what I think that might look like is, you see we found support here in the golden pocket, the between the 0.618 and 0.65 Fibonacci levels, which are $37.50 and $38.29 respectively. We broke right into there, and then we bounced up from there. And like I said, I previously described that this is a really key level that you don't want to break if you want to stay bullish. But there could be a scenario where, like a whale or something comes in and really tries to push the price down. And it might be like, and what I would say, it's more likely to be a fake out in this scenario. I think we're relatively bullish. But there might be one more push from bears down to test the bottom of the falling wedge. And that might be at this $36.30 level before we break back up and actually break out of the wedge and prove the wedge to be true. That's kind of the scenario that I think you might see. That's at least how I'm treating it. I did personally buy in this golden pocket, and I do want to say that this wedge also does run into our long-term bull trend that I've been charting, and so we've found support on that bull trend now, and we're actually kind of approaching back to it. If you take a look here. So I guess we can do a wave count on this and try and see what I think. But typically, so if this is C, this $37.60, what we've tested already and broken out of, and this could be a double bottom here. You see this big candle here? You really could make the case that this right here is a double bottom. That, here in real time, I'm kind of looking at it and I'm thinking, man, maybe we don't see another push. Maybe we don't see a push below this level. This right here, you had two hard tests here at about 9:30 and 10:30 on September 21st. And then you come back the beginning of the day on September 22nd when market opens, and you test that 3760, 3780 level again. It's pretty significant support. So based on that, here's what I think. If you do a fib retracement from the bottom of this let's do it from here because this is the double bottom. And you go to the top, your golden pocket in this retracement would be between $39.13 and $39.27. This looks pretty convincing to me. I can't lie. So what I would say then is that perhaps this is the beginning of wave three, which has a wave one. You could see the wave two come back. There you go. Test this bull trend again. And then you could see an explosive move up for wave three and wave four. And I'll actually chart this more accurately using Fibonacci so that I can show you guys how I do that. So assuming this is the top of wave one, and that's why Elliott wave can be a little bit tricky because you do have to assume sometimes. But as I said, the wave two, if I project it coming down here, what you could see, and this is the hourly chart, by the way, again, what you could see is, let's get our fib extension tool out. Let's do a measurement up to the top of wave one and then down to the bottom of wave two. And then let me make this a little bit easier to look through for you guys who are watching. By the way, thank you guys so much for the support. All the comments and stuff. It's crazy. I can't believe that that so many people are kind of gravitating to the channel. And also, I do plan on going to Guitar Center after this video and and investing in a microphone to improve the quality of the videos. I'm not unaware that it's not the best quality, but I just kind of started. I started doing this like a week ago, so I started doing videos like a week ago, so I didn't like have equipment and stuff ready. So yeah, so what you could see is basically what I'm trying to say is this is wave one. Yeah, I mean, this could get really explosive. Now that I'm looking at it, I mean, you could be looking at a pretty explosive move here. Because this would be wave one. Yeah, so I'm sorry. I'm trying to keep track here. So this is the major move that you could see. I'm gonna make that pink. And then within that major move, you have a sub move. I'm just trying to digest it because I haven't looked at the chart since earlier, so I just gotta see where I'm at with it. Yeah, I just don't think that we have the momentum for that big of a move here because unless this corrects itself up. So let's get a little bit more granular here. So and I apologize that I'm not like 100% sure of what I'm doing here, but I'm just literally charting this in real time just to give you guys my full unadulterated take. Okay, so if you look at this, then maybe from this double bottom, what you have is this is wave one, two, and we could be in the middle of wave three right now for this. You could see this happen. Yeah, so and I would have to sit down and actually spend some time looking at like the minute chart and stuff to really dissect this and try and figure out. So this is your double bottom. This is that 37.73 where we turned right around the golden pocket. You have a 1, 2, 3, 4, 5. Or you could say this is the 5 maybe. I mean, it's not. So maybe this is then the 3. And this is the 4. That makes a little bit more sense. Because the 1 and the 5 are typically around the same height. Like they're the same length normally. And then you have your A, B, C. Yeah, you could draw it either way. C corrective wave. And then you have your 1. Sorry about the delay. Your 1, to probably in pre-market you have your 3 finishing, and then there was, oh look, this is your 3 here at 41.47. Your 4 probably stopped at $41, and then you have your 5 maybe. And then from there, you have an A, B, C. This is so granular. I did not mean to count like this in this video. 1, 2, 3, 4, 5. That's kind of a weird. Yeah, that's probably why we got rejected here because it was such a weak 5 wave. A, B, C. Yeah. See, this is what causes downtrends. These really weak 5 wave sets. I'm really struggling with this wave count. I'm not gonna lie. So maybe I just need to focus more on the pattern. I'm sorry about that, guys, but basically the way it works is Elliot wave is you have a 5 wave set that's like your major impulse 5 wave, and then you have subsets within them. So in either one of these runs that you look at in January or June, you could count like a major 1, 2, 3, 4, 5. But within that 1, 2, 3, 4, 5, there's smaller and smaller 1, 2, 3, 4, 5s as well as ABCs. Is the basic concept for anybody who's not familiar with Elliott wave. And then you usually measure your targets based on Fibonacci. So let's just do that. What I think is you could still have. I think you could still have downside down to the 37 ish dollar range. I know we closed at 39.98. Bears might take that as a signal, like, hey, we got one more time, or not one more time. Oh yeah, we're gonna win finally, or something like that. But I'm pretty confident. The Oh wait, hold on, I did that backwards. Sorry. I'm pretty confident that what you're looking at here, C D E, is a A B C D E 5 wave, and I think that we've seen the bottom. I'm pretty confident we've seen the bottom. I think that anything that would be running down from here is just a part of this E wave. So even if it like does like this sort of thing, right? It's like it moves kind of across this E wave that I've drawn here. I think it's still part of the E wave. I don't think that I think we're done with downside here. Major downside at least. Unless there's just, like I said, there could be one big nasty wick or something that comes in because one bear that has a ton of money just jumps in like a huge short position and opens it up, and then that could just be the rocket fuel for the next move up. But I think that we've done enough here. I think that and like I said, I mean, I can do head and shoulders, everything like that, right? So if you're not familiar with head and shoulders, normally you have a move up, a move down, and that creates your first shoulder. Then you have a head. Perhaps you would say this is the second shoulder, and then you have like a move down. And normally the break, like the target is going to be right around where the pattern started, and that could take you down to this $32 level. Again, I think that that's like a panic scenario, and I think that it would be washed away very quickly. Also, you could argue that this is the head and shoulders, but I just think that it's just not as convincing to me. The head and shoulders just isn't as clean. And then another thing that I've been tweeting about too is that you notice that when you have a larger pattern like this that's developing, a reversal pattern, you're going to have these bearish patterns built into it. That's just the nature of it. You can't have a reversal without bearish patterns being drawn in. But what you start to see is when sentiment starts to reverse, like you're causing a reversal, you actually start to see the pattern develop itself within itself. in a way. So just to illustrate, like right here is probably a falling wedge that's happening if I was to zoom in on a smaller time frame. Let's see, to the minute chart. Yeah, so you see, you have this aggressive downside here, and then just this flat, right? Look at how flat the bottom price action is in this wedge. This is on the minute chart, by the way. But there's no action happening here. You have this aggressive downtrend today, where the price is moving down pretty aggressively, especially to start the day. And it seems like bulls can't get a hold of anything, but bears just keep getting rejected at these much less and less impressive areas. I think right here is it. Yeah, I don't know, man. I'm getting pretty convinced here. I'm convincing myself pretty much here, and I can do a bearish video too, and really just wipe all this clean and try and take myself out of it so that I'm not being biased, because I am a bull and I do have a long position. I'll be frank with you, but this just looks like it just looks like what I would I this looks like where you would have your measured break. Like boom, here it is. And then we could just break out first thing tomorrow. I mean, that's a realistic possibility, and this would bring you out to 4150 again, and likely the momentum from that, especially breaking the larger wedge that I charted here in the blue, breaking that larger wedge, the basically it'll spark the bulls to come in, especially whales. They'll see that and say, "Oh, this is a reversal." Um, and you'll start to see that move up. So yeah. So then, if that happens, the next big thing that you're looking for is this yellow resistance. And also, I do want to point out that just briefly, even though I will make a whole video that's kind of comparing these yellow lines. See this resistance point right here at the top of this run that we just got done with, and we're correcting from $52 or something. It's so similar of a point in the run after the run in January, where we got stopped out at like 1225 in April 26th, and then you see this real curved move up, and that's like your rebreak. It's almost like a cup and handle, and you, oh man, I mean, this is pretty good stuff. I don't know. I feel good about this. This seems, I think that you're going to start to see sentiment shift starting tomorrow. Maybe. I never want to be like 100% in. I never want to be like 100% confident of anything, but you can see this cup and handle that I'm drawing with my highlighter. Boom. And it just broke to the upside like that. You could say that you may have a similar structure happening there. And I'm just drawing it loosely because that's the first time that I've really looked at it. It's probably more like this though. Or hold on, sorry. And I do say this too on Twitter that this is what it looks like. Boom. This is what you could see. I do say this on Twitter though too that typically in my experience AMC does tend to respect like triangles and wedges a little bit more than it does patterns like cup and handles or bull flags and bull pennants, it seems. Um, but perhaps that's on a more granular level, and maybe the more macro moves can be captured in these types of rounded sort of patterns. But yeah, so that's pretty much the conclusion for me. That's my analysis on it. Sorry that this ran a little bit longer. I was looking at the clock earlier, and I was like, oh, 15 minutes. I feel like I'm wrapping up, and now we're at 25. So I appreciate you guys sticking around till the end if you did. And if you enjoyed the video, make sure you drop a like and leave a comment. If you have any questions or anything like that, I try and answer all the comments on the video, so make sure you do that. And yeah, share this out to anybody that you think it's relevant to. Um, and yeah, follow me on Twitter at David Marino Jr. And with that being said, I'm going to head over to Guitar Center and see about getting me a new mic. Yeah, so enjoy the rest of your night and good luck tomorrow. Tomorrow is, tomorrow's Friday. Wait, Friday is the day that they usually pin the price with options. Okay, so just a shift. It's possible that you could see some a little bit more sideways action. We do have room for that though. So you could see it kind of get pinned. I know that a lot of people were talking about the $41 level was where like market makers can make the most money this week or something. So, uh, yeah, I mean tomorrow could be pretty sideways, but this is probably your outlook then. And I'll do an update tomorrow. But this is probably your outlook then going into the beginning of the next week after some sideways action because they really do pin the shit out of this thing on Fridays it seems. But yeah, anyway, appreciate you guys. Take it easy. Have a good night.